Okay, we're more than 15 minutes into market open. I've already done some charting. Here's what we see, right? On the 1-day time frame, we have this massive bullish flag. You can see it on the 4-hour. You can see it on the 1-hour as well. I'm not going to be married to this flag. Again, I don't pattern trade necessarily, but patterns exist for a reason. You want to take note of it, at least recognize that it's there. It's not going to impact my decision making on if I should or when I should enter a trade, but I mean, this exists for a reason, right? You want to take note of it no matter your strategy. That being said, that I'm not going to let it impact my decision making, we could see that we're kind of rejecting off of this bullish trend line, or we might if we push a little lower. Even if we do that, I'm perfectly okay with it. Why? We have a 30-minute order block right here. We just tested this 30-minute bullish order block, and we're making a bullish SMT. In relation to this level, ES has not taken out this low. ES has not taken out this low, right? So that's a bullish SMT. Now, since I'm trading off the 30-minute order block, or I'm not trading this because my daily bias is bearish. I'll get into that in a second. But since I'm looking at a 30-minute bullish order block, I'm looking for a 30-minute SMT divergence, and I'd have to wait for that time frame to change. If this was a 15-minute bullish, I'd look for a 15-minute SMT, and that would suffice. But because it's 30-minute, I'll wait 10 minutes, wait for the 30 minutes to finish. ES might end up taking out their version of this low. So I'll have to kind of adapt as we go. But the reason why I'm liking this and why I want to see a bullish SMT is because on a macro time frame, we have respected this 1-day bearish fair value gap. You could clearly see that we have a wick reject off into it and then a massive bearish candle of what is right now the 1-day time frame. Now, even if we look at the 4-hour, this is that 1-day bearish fair value gap. This is price continuously rejecting off of it, taking out this intermediate high right here with this candle wick. And then we have another 4-hour bearish fair value gap. Now, my prediction is that we are going to retrace up into this gap and then eventually take out this low, and potentially last week's low as well. Why do I believe that? We have a 30-minute bullish SMT rejecting off of a 30-minute bullish order block, taking out all of this buy-side liquidity, sweeping all of this buy-side liquidity up into this 4-hour bearish fair value gap. Now, I don't want to keep saying the word fair value gap. The key point is that there's 4-hour inefficiency here. Price will want to fill that inefficiency, generate liquidity, which essentially just means retail traders who are entering short positions. That is our liquidity, and then enter short. And I guess to think about it fundamentally for an SMT, right? That was a fundamental way of thinking about a fair value gap. For an SMT, it's that people are seeing price on NQ pull into a more discount zone. That discount zone is in relation to this prior low. And the reason why it would be considered discount and why people would think long is because ES has not taken out this low. ES is somewhere right around here. So people are looking at ES and thinking, oh, ES is still bullish. In a bearish context, ES is still bullish. So NQ has just swept a more discounted zone, and now is a perfect time to enter longs. That is what is going on in their head fundamentally. And that is what large financial institutions do as well, right? They want a premium entry, a discounted entry. So I like that SMT is within the 30-minute order block, and that we'll wait 8 minutes for that time frame to end and confirm that the SMT has finished. Once it does that, we're going to have to be patient on this one and also adapt it in case ES ends up taking out this low. But my prediction is that we'll come up, take out this buy-side liquidity, enter this 4-hour inefficiency. Now, why am I bringing up this 4-hour inefficiency? Because a 4-hour bearish fair value gap within a 1-day bearish fair value gap, that is important. Especially this happened in the overnight session, right? This happened during Asia session. Price will want to, like a standard thing that'll happen every time the market opens is that it will want to accumulate price, it will want to then manipulate price, and it will then want to distribute price. AMD, right? Accumulation, manipulation, distribution. Right now we're in the accumulation phase. Price is accumulating, okay? This is the accumulation. Now, accumulation doesn't necessarily have to happen the second market opens. We could have been accumulating price, which is essentially just consolidation, price consolidating. It is accumulating in pre-market. Could also accumulate once market opens, but I'm just saying in this case, it's pre-market into market open. And then it will want to manipulate price buy side, and then it will want to distribute price sell side. Accumulation, manipulation, distribution. So because that sequence is so common and it happens every single day, and again, it's not always going to look like a zigzag. Price could accumulate here, it can manipulate downside, and then it could come up and then distribute downside as well. So we could manipulate and distribute the same direction, but based off what I'm seeing, the fact that there's a 30-minute potential bullish order block, 30-minute potential SMT into a 30-minute bullish order block with a 4-hour bearish resting right above it, that leads me to believe that we'll manipulate buy side and distribute sell side. And that is why I love this 4-hour inefficiency right here, as you can see right here. And I don't really see it on the 1 hour, so that's why I'm looking at the 4-hour. That is my prediction. We'll have to kind of wait for that to happen. Yeah, like NQ's pushing right now, but just to kind of show you the SMT, this is the bullish SMT on ES, right? So the second it ends up taking out this 1 a.m. low from Tuesday, that SMT is no longer an SMT, and then we'll have to adapt, and probably, honestly, we might just have to shorts at some point. It's kind of happening right now, so let me pause, make my analysis, I'll resume, and kind of explain what another option would be in case ES does end up taking out that low. Okay, so another thing that I saw, which I kind of missed out on explaining, is that we have a massive 1 hour, 4-hour bearish SMT divergence, and this SMT divergence is within our 1-day bearish. That's important, right? ES took out this high from 8 a.m., 8 a.m., 9 a.m., 10 a.m. on Thursday. ES took it out. NQ has not taken it out. So what I could potentially see happening is this bearish candle, by the end of these 5 minutes left, once 10 a.m. hits, we end up taking out this low. That could happen. Where in that case, ES is still ways away from taking out their version of this low. The reason why I'm exploring that is because ES is very close to taking out this 1 a.m. low, and it no longer being an SMT in relation to this low, meaning both pairs have taken this out, and both pairs are descending. But look, ES still has not taken out that low. There's only 3 minutes left. It could still not, but the second it does, we'll have to adapt and see, like, all right, should we just take short sooner? Should we look for a lower time frame entry? But I'm really confident on bearish. And again, that narrative could flip, but we have a massive 1 hour, 4-hour bearish SMT. We have 4-hour inefficiency here that we could always target. The only issue is that we're within a 30-minute bullish order block. So I'm thinking that this and a potential SMT could be used to generate liquidity that will push price up temporarily to take out buy side so that we can continue long-term sell side. And honestly, even if we don't create a bullish SMT here, I think that us being in this 30-minute bullish order block and respecting it is sufficient for price to drive up and then for me to take my short entry. But like since market has opened right here, I will say that I'm still confident that I didn't miss an entry because there hasn't been a good entry. There's only been this 15-minute bearish fair value gap that price has swept from this almost no candle body long wick candle right here. This 9:30 a.m. 15-minute candle. We swept that. So that is the only thing where I could see that people may have potentially entered at, but again, we're looking for price to accumulate, manipulate, and then distribute. And I think that that manipulation could happen to the buy side and then distribute to the sell side. Accumulation, manipulation, distribution. So until then, we'll wait. ES is literally about to take out that Tuesday 1 a.m. low that we have right here. Yeah, it's about to take it out. That just took it out. All right, so there's no longer an SMT right here. There's no longer an SMT right there. However, Man, it's kind of tricky now. I guess us rejecting off of this bullish trend line from this flag could mean something, but again, we don't want to take a trade or based off that. I think we have to wait. I need price to pull back. If I want to take shorts, entering now is not the time. This is a FOMO kind of entry. We want a price to enter a discounted zone. See a clear manipulation. I have not seen a clear manipulation at all. And if we end up manipulating sell side, I mean, the whole narrative is flipped. We might have to look for longs, but I haven't seen a manipulation yet. So we're going to wait. 10 a.m. just hit. I might have to give it another 15 minutes. The second I see something, we'll go from there. Okay, now when we're an hour, almost an hour deep, and we're still bearish, I just accept it that we're no longer going to hit my target up here. We're not going to fill this inefficiency up here. We're not going to sweep this buy side liquidity. I'm going to have to look for a more premium entry, which I guess if you entirely disregard this because of the way market's pushing and the fact that no retail trader is going to get in at around here, there is still in relation to that. In relation to that, it's premium, but in relation to where I would actually enter, we could still find a pretty discounted entry. I guess the only option I'm seeing right now is, you see, like we're entirely disregarding that 30-minute order block here. I guess I'd have to wait 12 minutes to see how we really react there, but if we have a small candle body and a large wick at this 30-minute order block, then there's a decent chance we could pull up. But if we don't, then we still have this 15-minute bearish fair value gap right here. That is a part of this 30-minute mitigation block, or sorry, breaker block right here. This breaker block was caused by this 9:30 a.m. candle on the 30-minute slamming right through it. So this is a decent area to enter right here, this inflection point. And you know, it's not bad. Trying to see if there's any 5-minute inefficiency as well. Yeah. Until then we wait. Okay, we slammed right through the order block. Disrespecting that. And just to give you an idea, right now NQ is at a price where we just took out last week's low. We took out this Thursday 1 p.m. low. ES hasn't even taken out its previous day low. It hasn't even taken out their version of this low. Definitely hasn't taken out this Thursday low. And it is right here in price in relation to this flag. We have just crossed the buy side of this bullish flag, whereas ES has crossed the sell side. So I do think that we will be bullish at some point. Again, the move that I explained, where price is going to want to take out all of the sell side liquidity and then push buy side, that is happening. That is carrying out as we speak. Now, when to enter our trade, that's where it becomes a little difficult because there hasn't really been a clear entry point. The only manipulation I can think of is on the 15-minute time frame where we manipulated this bearish fair value gap, but we didn't create confirmation. Again, this is the manipulation. Confirmation with my strategy that has a 70% win rate is price inversing a fair value gap of the opposite direction. So if I'm taking a short, if I'm bearish, I want to look for price to slam through a low time frame bullish fair value gap. So I guess let's say these three candles made a fair value gap. Candle 1, candle 2, candle 3. It obviously didn't, but let's say there was a gap here. I'd want a candle body to slam through the second candle in that sequence, like this candle right here, like this 9:51 a.m. 3-minute candle right here. I'd want it to slam through the low of the second candle, assuming this had a gap. So I'm looking for an inverse of a bullish fair value gap. That's my confirmation that we are entirely disrespecting bullish. So I first see the point at which we could have that price rejected, right? Which is this 15-minute bearish fair value gap here. So let me just mark it. Because price has not returned higher than this level since we've rejected off of that. So it's only fair to assume that this was the manipulation. This is where price manipulated into this 15-minute bearish. But in terms of when to enter, I'm glad I didn't enter because my strategy did not reveal an entry. Look, this is the manipulation, us sweeping all of this buy-side liquidity into this 15-minute bearish fair value gap. And then we did not inverse a bullish fair value gap. Look for any bullish fair value gap that we inversed. You can't find one. You can't even find one on the 5-minute, the 3-minute, the 2-minute, or the 1-minute. Not even the 1 minute. Where? You can't find one. You can't find one. The only thing I could think of is, let's say 30-second. I guess 30-second did. 30-second did. Right, we have this 30-second bullish fair value, candle 1, candle 2, candle 3. Price came up here, and then we had this candle body slam through all of this. I guess this was the entry point right around here. But do I really want to enter a trade based off of a 15-minute rejection and a 30-second entry? Maybe. I guess one makes the other true. Like 30-second entry, it only happened on the 30-second, a time frame that low, because we rejected off of a time frame that's comparatively low, 15-minute. Usually we're looking for 4-hour, 1-hour, maybe 30-minute entries, right? But in this case, it's only 15-minute. So immediately, it's not even like it was 30-minute and 15-minute. Like a lot of times, if it's 30-minute and 15-minute, if there's a crossover in inefficiency, then I might consider it. But this is that fair value gap. You don't see anything on the 30-minute. Only on the 15-minute do you see it. So it was a low conviction trade if I had entered. I don't think there's a move that I'll find from here. I just don't think so. Yeah. That's the trading day. It's already 10:30. My cutoff time is 11:30. I will not enter a trade past 11:30 because I want to exit no later than 12 p.m. So it just looks like a steady downtrend from here. If we do end up retracing, I'll look back at it. But until then, it seems like a no trade kind of day. Preserve capital. Low conviction. I feel like that kind of makes sense because we have FOMC tomorrow. This is like a high news week or two that we have coming, and it doesn't take as much to move price in one direction or another. And that I'm not saying that it doesn't take much for there to be high liquidity, because if you think about it, it's not that much liquidity that we have right now. It's really not. It's really not that much liquidity. It's just that it didn't take much to move price. So we just took out last week's low. I'll see how this candle reacts. Until then, that's the trading day. Preserve capital, no entry. Let's just kind of plan for the rest of the week.